Hello, thank you for joining today's webinar. My name is Sharon from Premia TNC Taiwan. Premia TNC is a accounting firm located in Hong Kong, Singapore, Taiwan, Malaysia, Vietnam, Korea, China, Dubai, India, and Indonesia. We provide the incorporation service as well as bookkeeping, tax filing, payroll, and audit service. Today, we will talk about yearly filing with government and tax compliance in Taiwan. Over the next 20 minutes, we will provide an overview of the local reporting requirements, including local tax filing, tax compliance for companies and individuals, and we also have the Q&A section. You can raise your questions anytime during the webinar. Okay, let's start today's presentation. Regulatory filings. Currently, there are 4 regulatory filings in Taiwan, which is summarized in the table. The first one is VAT filing, and the frequency is every 2 months. The deadline is 15th and of odd months. For example, the deadline for January and February will be March 15th. The company also can apply for a monthly basis to file the VAT. The VAT tax payment amount is calculated by output tax minus input tax. If the input tax is more than output tax, the remaining part will be carried forward to the next period. The VAT filing should be filed to the next National Tax Bureau and can be done through online. The VAT filing is not required to subject to CPA audit. The second one is corporate income tax return. It is annual filing, and the deadline is May 31st of following year. You will also need to等一下，不是 Call Life 吗？Hello, thank you for joining today's webinar. My name is Sharon from Premia TNC Taiwan. Premia TNC is an accounting firm located in Hong Kong, Singapore, Taiwan, Malaysia, Vietnam, Korea, China, Dubai, India, and Indonesia. We provide the incorporated service as well as bookkeeping, tax filing, payroll, and audit service. Today, we will talk about yearly filing with government and tax compliance in Taiwan. Over the next 20 minutes, we will provide an overview of the local reporting requirements, including local tax filing, tax compliance for companies and individuals. And we also have a Q&A section. You can raise your questions anytime during the webinar. Okay, let's start today's presentation. Regulatory filings. Currently, there are 4 regulatory filings in Taiwan, which is summarized in the table. The first one is VAT filing, and the frequency is every 2 months. The deadline is 15th of odd months. For example, the deadline for January and February will be March 15th. The company can also apply for monthly basis to file the VAT. The VAT tax payment amount is calculated by output tax minus input tax. If the input tax is more than output tax, the remaining part will be carried forward to the next period. The VAT filing should be filed to the National Tax Bureau and can be done through online. The VAT filing is not required to subject to CPA audit. The second one is corporate income tax return. It is annual filing, and the deadline is May 31st of the following year. You will also need to file the provisional income tax by the end of September if your Taiwan company had profit in the previous year. The corporation income tax rate is 20%, and for provisional income tax is half amount of previous income tax payable. About the audit requirements, the tax return will be required to subject to CPA audit if the annual revenue amount is 100 million Taiwan dollars or more. The company applied for loss carry forward. Listed company or specified industry. If your company meet any of the criteria, you will need to do tax audit. The third filing is withholding tax reporting. The frequency for tax payment is monthly basis, and the withholding tax reporting is annual basis. The deadline for tax payment is 10th of the following month. For example, the deadline for tax withhold is January. In January is February 10th. The annual withholding tax filing should be done by January 31st. The withholding statement need to be submitted to taxpayer by February 10th. The tax amount depends on the withholding tax rate. Withholding tax is not required to audit. Exception for individuals who do not reside in Taiwan or foreign enterprise that do not have a fixed business location in Taiwan. If there are various types of income subject to withholding, the withholding tax must be paid and filed within 10 days from the date of withholding. They must also issue a tax statement and submit it to the tax authority. The last one is company management reporting. The frequency is annually and or any change happens. The deadline for annual filing is March 31st. For the change happens, the deadline is 15 days after the change is made. There is no tax to be paid and no need for audit. Next, we would like to introduce the corporate income tax. As mentioned before, for corporate registered in Taiwan, its income tax will levy on its total onshore and offshore income. You may ask, what if offshore income already being subject to income tax in other countries? The answer is that you can claim the foreign tax credit against the Taiwan income tax payable, with the limitation that tax credit cannot exceed the tax amount if Taiwan income tax applied. The below table shows the tax rate applied for Taiwan entity. Generally, the income tax rate for onshore and offshore income is 20%. If your profit is $100, then the tax payable amount will be $20. The third one is about the undistributed earnings. If you decide not to distribute the current year earnings to the owner or shareholders, your Taiwan entity might be levy a tax on the undistributed earnings. The tax rate for branch is 0%, and for companies is 5%. The income tax for capital gain from sales of security is 0%, which is the tax incentive in order to encourage the Taiwan stock market. Dividend income. The dividend income will be exempt from income tax if the individual is received from a Taiwan company. However, the dividend will be subject to 20% income tax if the dividend is distributed by a foreign company. The corporate income tax return for the year ending on December 31st is due on May 31st of following year, and the provision income tax return is due on September 30th. About the loss carry forward, corporate loss can be carried forward to against the future profit for 10 years. However, the income tax return must be audited by a local CPA. Audit requirements for income tax return. There are several criteria listed below. And if your company meet any of this, your Taiwan company will be required to do the tax audit. First, financial institutions like banks or insurance companies. Second, public companies. Third, companies that have applied for tax incentive and have annual sales exceeding 50 million Taiwan dollars. The last one, any company with annual sales exceeding 100 million Taiwan dollars. Right. This is the general introduction about Taiwan corporate income tax. Let's move to another tax subject, which is also very important for corporate. Value-added tax. Taiwan is using VAT system, which is similar to European countries. The VAT is levied on the sales of goods at each stage of supply chain. The service provided in Taiwan territory. When you sell product, you will need to collect output tax from your customers. And when you purchase goods, you will get input VAT from your suppliers. The VAT rate in Taiwan is quite straightforward. For general industry, the VAT rate is 5%. Therefore, no matter you are doing business like construction, manufacturing, or providing service, the VAT rate is fixed at 5%. If you are doing exporting goods or service to overseas, you can enjoy 0% tax rate and claim VAT refund. The rest of rates are for low special industries, such as insurance company, nightclubs. The VAT rates are quite different, depends on Taiwan government's intention. The last one, small scale business. This is for those individuals or partnerships who didn't register a legal business entity and with lower amount of scale. All right, we complete the corporation taxation section. Now let's move on to individual taxation section. To determine the individual income tax, we need to firstly identify the resident status in Taiwan. The resident status is basically decided by the days stayed in Taiwan. In the table, we can find that there are three categories: 0 to 90 days and 91 to 182 days are defined as non-resident, and 183 to 365 days is defined as Taiwan resident. For the onshore income, the individual income tax rate for non-resident is between 80 to 21%, depends on the type of income. And the tax rate for resident is progressive rate from 5 to 40%. Generally, all the income generated from Taiwan should be subject to Taiwan income tax, no matter how many days stay in Taiwan. However, there is an exemption for the service provided in Taiwan. If the days is within 90 days and the payment is made outside of Taiwan, then the income can be exempt from income tax. Many people also wonder about whether need to submit the tax return and when the deadline is. For non-residents stay in Taiwan within 90 days and between 91 to 183 days. If any income was not withheld by the payer, then the non-resident need to file the tax return to the Taiwan Tax Authority. The deadline is the earlier of May 31st of the following year, or 1 week before leaving Taiwan. If you are a resident of Taiwan, which means you stay in Taiwan more than 183 days in a year, you will be required to file your individual income tax return by the earlier of May 31st of the following year, or 1 week before leaving Taiwan. About the offshore income, it is basically non-taxable for non-residents. For Taiwan residents, it will be subject to 20% of alternative minimum tax. We would suggest you to discuss with the tax expert if you expect that a large portion of your income will be generated from offshore. The deadline for filing offshore income tax is the same as for onshore income, either by May 31st of the following year or 1 week before leaving Taiwan, whichever comes first. As shown in the table, the tax filing for non-resident is relatively straightforward and handled through withhold by income payers. However, for Taiwan resident, the taxation process is more complicated. Onshore income is subject to a progressive tax rate, range from 5% to 40%, with higher rate applying to higher income levels. In the next slide, we will discuss the exemption and deduction you may be eligible to claim. Taiwan provides a tax exemption for taxpayers, spouse, and dependents. The amount fixed at 97,000 Taiwan dollars for age under 70. For age over 70, the exemption amount will be 145.5 thousand per person. Taiwan also provides special deductions The first one is salary deduction. It applies to taxpayer, spouse, and all dependents if any of them has salary income. The exempt amount is based on how much salary income you have, and the maximum is 218,000 Taiwan dollars for each person. Interest deductions. Interest deduction is for taxpayers who earn the interest income from bank saving. The 270,000 maximum amount is for one tax filing, not for one person. The tuition. The tuition deduction is for any dependents who are studying in college level above schools. The taxpayer can enjoy 25,000 Taiwan dollars deduction amount per dependent. The taxpayer can also claim the sales property loss. However, the deduction amount can only be offset with the gain amount if there is any gain from the sales of properties during the same taxable year. If the taxpayer has any child age under 6, the taxpayer can enjoy the child deduction amount to 150,000 Taiwan dollars per child. According to the amendment to Article 17 of Taiwan Income Tax Act, changing the treatment of housing rent expenses from itemized deduction to the special deduction, the deduction amount was increased from 120,000 to 180,000. This change officially takes effect from this year, means it will apply when filing the 2024 individual income tax return in May of the following year, 2025. Here we just listed down the special deduction, which taxpayer usually claim for your reference. We will introduce another type of deduction for Taiwan residents. Here we can see two types of deductions in the table, standard deduction and itemized deductions. The taxpayer can choose only one of them for tax filing. The standard deduction is applied for taxpayer and spouse. It is a fixed amount of 131,000 Taiwan dollars per person. The itemized deduction, including insurance, medical, donation, and mortgage interest. For insurance expense deduction, there is no limitation for national health insurance, but 24,000 Taiwan dollars per person. For medical expense deduction, it applies to taxpayer, spouse, and dependents, and no limitation for deduction amount. You can also apply for donation deduction. However, there are more detailed requirements. Generally, the donation amount should not exceeding 20% of income amount with some exception provided. The last one is mortgage interest expense deduction. You can only claim one living house and the maximum amount is 300,000 Taiwan dollars. Okay, we have introduced the exemption and deduction a payer can apply for. We will show you an example for tax calculation in the next slide. Here we provide the comparison to tax calculations. One is assume that the taxpayer calculates the taxable income based on standard deduction, and the other one is based on itemized deduction. We assume the basic criteria is the same. The taxpayer has income of 2.4 million Taiwan dollars, which include 2 million for salary and 400,000 for interest income. The exemption amount is for the whole family, including taxpayer, spouse, and 2 children. 97,000 times 4 people equal to 388,000 Taiwan dollars. For salary deduction, we assume only the taxpayer has the salary income, so the deduction amount is 218,000 Taiwan dollars. Interest deduction was assumed that the family can enjoy 30,000 Taiwan dollars. The trial deduction and rental deduction, we assume the family can enjoy 150,000 and 180,000 Taiwan dollars. Until now, there is no difference between standard and itemized deduction for income tax return. But from the below part, you can see the difference. If the taxpayer choose the standard deduction, they can enjoy 262,000 deduction amount for husband and wife. Or you can choose the itemized deduction. By doing this, you need to prepare supporting documents for all expenses, including insurance bill, medical expenses, and donation. We just made up the number, which you can compare with the standard deduction amount. As you can see, the itemized deduction is higher than standard deduction amount. The taxpayer should choose the itemized deduction in order to minimize the tax income. You may also notice that there is a basic living difference just before the taxable income. This is a deduction released by the tax authority to protect the basic living right. Each person can have the amount of 202,000 Taiwan dollars for deduction. Here's an example to show how to calculate taxable income and determine which deduction is more beneficial for you. Once we have determined the taxable income, we can proceed the calculation, the taxable amount in the next slide. As mentioned earlier, Taiwan residents are subject to progressive income tax rate ranging from 5% to 40%. In the section above, you can see the formula for calculating income tax payable. Taxable income multiplied by the tax rate minus accumulated difference. Once we have taxable income, we can refer to the table below. We just need to find the label of taxable income and times the tax rate, then minus the accumulated difference amount in the table. And finally, we will have the income tax payable amount. Until now, we have completed most of income tax calculation. However, there is another tax issue we need to pay attention to, which is alternative minimum tax, we call AMT. The basic concept is that because the taxable income already excludes the exempt income, such as overseas revenue, we need to firstly add back those exempt income, such as overseas revenue. We need to firstly add back those exempt income and minus a fixed income. A fixed exemption amount of 6.7 million Taiwan dollars. The AMT rate is fixed at 20% to calculate the AMT tax. The next is to compare the AMT tax and the tax payable. We calculated based on the progressive tax rate. We will need to pay the higher one to the tax office. The tax authority providing two filing methods for taxpayer. One is manual and another one is online filing. Okay, let's move to next section, Q&A. We received a question before the webinar. Let's take a look what it is. Are all companies in Taiwan required to have their tax return audited? The answer is no. As we mentioned, not all companies are required to have their tax return audited. A CPA audit is required if the company meets certain criteria, such as having annual revenue of 100 million Taiwan dollars or more, applying for a loss carry forward, being a listed company, or belonging to a specified industry. Okay, if you have any other question, please leave a message and we will get back to you soon. Okay, let's conclude today's webinar. We also offer webinars on other countries, including Hong Kong, Singapore, Vietnam, Malaysia, and Korea. You can find the video and additional information on our website, or you can contact us directly for a free consultation. Thank you once again, and we look forward to seeing you soon. Goodbye.